Hello, everyone, and welcome to this episode of Coffee with Carl. Once again, I am your host, Carl Zoellner, one of the attorneys with Anderson Business Advisors. And today we're going to add to another video to the list of the special edition of the Infinity Investing update. So we're in a period of time right now. It's May. So we're in sort of a wild time in the stock market. But I wanted to show you some of the things that have transpired with that Infinity trade since our last video. So I brought my I'm trade on E-Trade out of my Roth account. So I brought up my transaction history so we could talk through some of the interesting things that have happened since the last time, or basically the last video we did, and run through what that looks like this year. There's a lot of portfolios out there that are struggling or might be in the red. Infinity investing is a little bit different just because I'm not so concerned about the overall account value as I am about taking value along the way. This year, I chose to do a little bit more and focus on AT&T. There's some, I don't know, probably mixed reviews on if that's a good thing to do because they did have a spinoff. They did cut their dividend a bit. But for me, the trade still makes sense. And quite frankly, I'm still making money on it. So works for me. I can chug along a little bit here while everybody else is, unfortunately, probably getting a bit hammered on the market over this last week or so. So let's talk about some of this and what it looks like as a thus far year in review in my, back and forth with AT&T a little bit. So number one is towards the end of last year, beginning of this year, I bought some AT&T, started with 800 shares, or this is probably from a sale that I did from the end of 2021 coming into 2022. Then that got sold, so I bought some more at a little bit higher. Next would be the call I wrote against it. So you can see 8T. The 8 stands for amount of contracts. Have to have 100 shares per contract. So I put all of my all of my shares up for rent at $26.50 since I was in the stock at $25.23. So if somebody decided to call me out of those shares, I would have gotten paid $26.50 per share to do that. Next thing up is you're going to see is just my annual contribution to my Roth, because if I can make tax-free income, why wouldn't I? So that's that deposit. There was an adjustment for fair market value, which sort of is a lack of a better phrase here, bit of a nothing burger. So kind of skip that one. So at that time, somebody decided to purchase my 8 contracts at $26.50. So that's why you see the option assignment. Somebody decided to buy it at that amount. So when they did, I got paid. Then I came back in after I got paid and bought 1,000 shares, or excuse me, I would have done a put into 1,000 shares of AT&T and got paid $564 to say I would buy AT&T back at that same price. So, and here's where that when somebody bought those 8 contracts at $26.50, that's the income from that trade. Okay. Now, next, I have a dividend payment because I bought some General Electric several years ago, and I just haven't had the heart to get rid of it. So you'll see very small dividend payments from General Electric. Then after I did that put, so we talked about putting the put here, I made $564.88 for just doing the put. Somebody took me up on the put, and I bought 1,000 shares of AT&T at $26.50. So here's where you see the $26.50 times 1,000. And then let's see. Oh, so then I got my first dividend from AT&T, which over that amount of shares was $416. That was just for, I guess, being a loyal customer and holding on to the stock. So I like that dividend. Even when they cut the dividend in half, it's still pretty nice. At the time where I got this first one, it was around 8%. It currently still sits around between 4 and 5%. So it's still a pretty good dividend there. So I'm still happy to hold on to it a little bit. This is the weird area that I still have a little bit of trouble even explaining. But when AT&T decided to, I guess, cut their dividend a bit, it was also during the same time where they were planning to spin off an entertainment portion of AT&T, which is Warner Brothers Discovery, or WBD. So this is sort of the net result of that spinoff. There wasn't a ton of income generated for it or an adjustment that made a lot of money or anything. But what was nice, or what I think is key, is I still got to see, or I still kept my 1,000 shares of AT&T. So sort of got some new shares from Warner Brothers Discovery. Downside of Warner Brothers Discovery was ultimately there is not a lot of value, a ton of value there, and there's not a lot of optionability there, and they don't have a dividend. So not super productive for what I do or from an infinity perspective, but ultimately a little green is better than no green. So I'll take it, take some of those additional shares. At some point when they get positive, I'll probably sell them and buy more dividend paying stocks I can write calls and puts against. So not a bad deal. You'll see here next one, General Electric, another one of those tiny dividends, because back in was a couple of years ago now, they cut the dividend to like 1 cent. So not a ton of them. Let's see, just a retirement sweep account. That's basically the equivalent of your interest you get in having money in a savings account. So a couple cents. Then we get the next AT&T dividend. So remember I said they cut it in half. That's about exactly in half. So it was $4.16 on February 2nd, and it was $2.77 on May the 2nd. So like I said, still a pretty decent dividend just for holding the stock and letting it, it'll grow over time. So letting it grow. After I got the dividend, I went in, did some calculations to see where my basis was at in the stock. And I believe I was right at, it's like maybe $19. No, that's not right. Yeah, I think it was like right around $19. So at $19, I said, okay, well, I would be willing to sell my AT&T stock for $20 a share. And then to get good value out of it, I had to push that call out to June 17th. So that'll be coming up here in about a month or so. For writing that call, basically saying I'd be willing to sell all my shares for a $1 profit. So that'd be a $1,000 profit if somebody takes me up on it. I'm also getting, what is this, $435 just for writing that call and saying I'll take a $1 profit. If that expires worthless, so nobody takes me up on that $20, I still get to keep that $434, and I'll just do it again. So like I said, just because maybe the AT&T number or the stock may be going down, especially here over the last couple of weeks, then doesn't mean I can't profit off of it along the way. Same thing with the Warner Brother. There was an option to do some calls on it farther out. So you'll see October 21st before I can make, almost anything on it. So put it out to October 21st. I think I've only got something like 200 shares and some change from that spinoff, but not, like I said, not a bad deal. And I'm already making some money off of it. So on that one, about $174, $175. But I won't know if somebody is going to take that stock from me at a profit, or if I'm just going to get to keep basically the rental fee on it. So pretty interesting. But like I said, this is number one, I trade in my Roth account. So taking losses isn't super beneficial to me in my Roth account. But these are the transactions. I mean, you can see I didn't all types. So I'm not editing the transactions to only show you green. If we look at the overall account value, my overall account value would be lower than it was when I purchased it, just because the account value is still taking the ebbs and flows of the market like everything else. But you can see from the green, I'm making money along the way. And once my equity position is in a good spot, then I can always, if I wanted to, always sell for a profit and walk away. So this is not to say I have the whole thing figured out or I'm some sort of masterful trader here. I went through the Infinity Investing class, the first one that was in New Orleans and got hit by a hurricane. So went through the same class, basically. Most of all of you have, especially involved with the stock market. For whatever reason, I've really appreciated and liked working in the stock market, so I kept going. So you refine what you do, go through, find that infinity number, and I'm slowly growing my account like everybody else. But some pretty nice little, at this point, some pretty nice little nuggets along the way, right? Couple $400 pops, couple $100 pops. And, maybe once that account grows from, I don't know, 28,000 to maybe, 100, 150, 200, 300,000, then all of a sudden those numbers start getting bigger and bigger with the same type of strategy. And it's really conservative, really safe. I'm not taking any sort of wild swings here, and slow and steady, right? It is not the most exciting or the sort of sexiest trading that's out there. But if you're trying, especially in a time of crazy volatility and rockets up and down in the market, it's a great way to take a sort of a consistent gain over the years. So I've enjoyed it so far. I'll come back with another update or summary. And in the interim, if you're not already a member of our Infinity Investing, I just call it club, Infinity Investing Club, you should join. There's free options, there's pay options, there's real estate options. It's just a great way to change the way you think about it. Also, if you haven't read Toby Mathis's book, which is named Infinity Investing, I would encourage you to. I think it's been on the bestsellers list. It's been on Amazon's bestsellers, and I've even had a couple of clients who found it in an airport and bought it and read it. So great book out there too. So along with that, I would encourage you, as always, please like, subscribe, share with your friends. We like to know we're doing a good job. So the more you share, the more you like, the more you interact with our channels, the more it encourages us to keep making and putting out great content. So until next time, as always, thank you all for joining me for Coffee with Carl, and I will catch you on the next episode. Thanks, everyone.